What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is April 5th of 2022. Please go ahead and click the like button on this video and also subscribe to my channel. Today we are going to be talking about the price action in the indices. We're going to talk about the trend change that just occurred today and just detail the weakness that we saw in the market. Before we do that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters, and last but certainly not least, do not YOLO your entire account to any one of my trades, anyone's trades for that matter. All right, let's take a look here. So going from yesterday my trend model flipped to a +3, and it really looked like, oh my gosh, we have Tesla exploding to the upside, we have Apple, all these mega cap tech names. And in yesterday's video I talked about, hey, like, this was really odd. The market went up, but there were all these divergences. Like, it seems really strange. The small caps really weren't participating. And lo and behold, today ended up being the biggest rug pull I've seen in quite a while. S&P 500 finished down 1.24%. NASDAQ QQQ finishing down 2.22%. IWM small caps down 2.31%. Dow Jones only down 0.81%, best performer for the day. And the ARK Innovation ETF, which was yesterday's top performer, gave everything back today. It was down 5.6%. It's pretty wild how much that ARK Innovation ETF can move in a single day. Volatility expanded across all of these indices in a way that it hasn't done in a few weeks now. And you can see the breadth was pretty dreadful across the board. We had only 13% advancers in the small caps. And take a look at this. So the heat map was an absolute bloodbath. In the morning, I actually posted this on Twitter. Pretty much we saw the exact opposite action that we saw in the prior day. So in prior day, it was basically like Apple's green, Microsoft, Nvidia, Google, Amazon, Tesla, Facebook, all of these were bright green, but it was masking a lot of weakness under the surface over here on this heat map with all the other groups. Today in the morning, I thought it was very odd that I was like, now all these mega caps are super weak and everything else is holding the market up with a rally. So I was actually pretty skeptical going into today, and I was like, hey, this could very well be a rug pull. So basically the only trade that I did for today was I actually closed out the one long that I added yesterday. So yesterday I put on this ETF, it's BITO. This is the Bitcoin Futures ETF. And right at the open, you can see here at 9:31, I closed it out for a complete scratch. I closed it out. It's kind of funny. It gapped up about like 1% and change, but I could only get $3.45 when I closed this, because right off the jump, I was like, something doesn't look right here, and I'm just going to raise some cash. So I closed that one out. And yeah, throughout the day, the market really just deteriorated. You can see here on our sector map, all of the big winners from the past couple days, like it was like, oh my gosh, biotech's going up, Chinese internet's, like all these other areas of the market, like the semiconductors down 4.6%. The only green performers were utilities, healthcare, and consumer staples. And there's always this hesitation, or not hesitation, this temptation. It's usually by newer traders that they want to try to go for that crazy swing long no matter what the market environment is. So it's like, all right, there's green somewhere, utilities, let me get long a bunch of those stocks. But it's really tough in areas like utilities that are just such slow movers. It's almost like you're picking up pennies in front of a steamroller. Style factors, we had the growth style factor down 1.92%, momentum down over 2%, high beta was down 2.73%. So this was about as risk off as it gets. And this is occurring during a window of time where the seasonality is the best it's really going to be all year. So that's definitely another little bit of a red flag. Yeah, let's take a look at this. This is just something to keep in mind. I always keep this in the slide deck for moments like this. And this is from Mark Minervini's first book, I believe. And you can see here in the stock market, you have the luxury of being able to stay on the sidelines free of charge, observing and waiting for the most opportune moment to wager. You can see the market's cards before you bet free of charge. This is a wonderful advantage, yet few exploit it. And I know most traders, yeah, they want to see the action every day. It's more like an addiction. It's almost like sitting in front of a slot machine. But for a day like today, there wasn't a whole lot to do unless you had a risk to take in. Or maybe, on the speculator side, you wanted to short a few things. Let's take a look at the S&P 500. So this is looking like it could very well be a lower high in the market. So we sort of went in, put in like this parabola, and we had a pullback that lasted a few days. We bounced off of it. It looked like, okay, we might just move right back to the upside. And I could tell with the way that my trend model flipped and then the weakness that we saw right from the open today, I was like, there's probably so many players out there that, they got sucked in right on the highs, and now everyone's sort of rolling over together. And take a look at this, where we actually closed below the 10-day EMA, which we have not done since the lows that occurred in mid-March. So that's definitely noteworthy. That is a change of character in the market. And take a look here. The main level that I was watching throughout the session was this weekly point of control. And for the S&P 500, it was at 4566.75. But the real tell, this is what made me just right from the get-go, like, this is not a good tape. Take a look at the NASDAQ. The NASDAQ, remember, this one led the market higher yesterday, right? And you can see what got me more bullish yesterday, or at least closing out some hedges, was that, hey, the Qs, we crossed above the weekly point of control. Once you're above the weekly point of control, suddenly you're looking at the weekly value area high and you're starting to set your sights there. But already in the pre-market, before the market even opened at like 5 a.m. or whatever it was, we slipped below that weekly point of control. So that was the little tell for me of, hey, the only exposure I added yesterday was BITO because I wanted to pace myself. And even that, I'm not going to get stuck in this bias of like, all right, now I need to get long. So I just clipped that right out. And you can see the NASDAQ, we actually faked out above this weekly point of control after we dipped below it. And once we lost that level, it was pretty much off to the races to the downside. Now, in just 1 day's time, we went from, oh my gosh, everything's rallying, super bullish, Tesla, Apple, blah, blah. And now here we are. We're actually very close to the lows we made just 2 sessions ago. So heading into tomorrow for these Qs, definitely watch this 362.39 level. This is our weekly value area low. I would not be surprised if we get some sort of overnight gap higher and we even trade inside of this. What's going to be most important is, do we close inside of it? Because I could definitely see a scenario where we trade inside of it, then we fail, and suddenly we're looking at these lows from 2 days ago and even this virgin point of control down here at 356.73. So as of right now, my trend model flipped back to -1. This market definitely guilty until proven innocent. And the other big thing that I'm watching is going to the weekly chart. Look at this. So the Qs, they tested this yearly value area high, and we even tried to trade above it. We faked out above it. Now this week we tested it once more, and again another failure. So that's not looking so good. Same thing with the S&P 500. Look at this. So this 20-week moving average. Last week, I pointed out in our weekend market analysis video, hey, we did close above this 20-week simple moving average, even though we basically put in a doji candle and sucked in a lot of longs up here at like 46.40. So I was like, okay, glass half full. This could still move up to the yearly value area high. Now here we are. We tried again to move higher. And so far we have a red weekly candle. For me, another big line in the sand is, do we close below this 20-week simple moving average? Because while the market was in a nice healthy uptrend throughout 2020 and 2021, we never closed below that level. So I do think this is important. And it's right down here at around 4,500. So a nice even level to watch. So we do have levels to watch, which is good. And we do have some clarity on the market. So I much prefer when, like, okay, here we are. We're starting to get the whoosh down. I can see the character of the market changing. And when we're sort of like in that in-between, or we're overextended but it hasn't switched yet, that sort of environment can be pretty tough. Let's take a look at these small caps. Yeah, small caps, they're failing to break out from this monthly value area. So they failed, and look at this. They also closed below the 20-day moving average. So we're seeing a lot of changes under the surface here. Or not even under the surface, it's right on the surface. They really just tell you, like, is this the most ideal environment? No, it's definitely not. Then the Dow Jones, a little bit stronger. But the Dow Jones is just kind of moving sideways for the past 2 weeks while the other indices moved higher. So let's take a look here. Overall, I think you sort of get the drift of what I'm saying. You know, for me right now, I'm in 86% cash. The one stock that I am long is Sedge. And this one definitely looking pretty good, even though the market's been weak. So we tagged this 20-day simple moving average. We bounced off of it. We were not able to close above this monthly value area high, but it really just shows me that there are players that are accumulating these solar stocks here. So yeah, still like Sedge, but if it hits my stop, then I got to just pop right out of it. Oh yeah, one other thing that I want to mention before we wrap here is this is another tell that was really just illuminating for me. Definitely take this seriously. The 10-year Treasury futures, look at this. We actually made a new low. And we have a version point of control right below us here. We're at the bottom of value. The glass half full approach could be, hey, we're tagging the bottom of value. And if we hold that level, maybe these treasuries bounce. But yeah, it's not really good to see these making lower lows. And same thing with the 30-year Treasury futures. These were down 1.6% today. That's a huge move. Yeah, look at that. That's a 2 ATR move. That is massive for a single day. So the volatility that we're seeing in the Treasury market is definitely no joke. So yeah, for me, I want to make sure this is really the easy part. Like, I'm in mostly cash. I took off some exposure today, starting to see all these changes occurring under the surface. For me, what I'm looking for, to be honest, heading into tomorrow's session is, do we get some sort of overnight gap that we can then fade? Maybe get short or, you know, add some puts or whatever. But take a look at this. This is one more thing. I'll leave you off on this. So as I did my scanning, like, just look at what the semiconductors are doing. These things just completely rolled over. They're trading well below where they got to 2 days ago when the market was on the lows. So yeah, the semiconductors are completely rolling over here. And look at this. This ticker symbol RMBS, this was one of the leaders on the last run higher. Like, look at this. Off the bottom on March 14th, this stock advanced a good like 30% off that low. And look at this. We just gave back everything. So definitely keep this in mind. It basically means institutions, they are selling. So when the institutions are selling, you know, we all have that temptation. We want to be the hero, but it's much better just wait until you get some clarity. With that being said, that about does it for this market recap video. Hope you all had a good trading session, and I will see you all tomorrow. Never a dull moment, team.